Hey, everybody. Welcome back to the Global Ledger. I'm Justin. Good to be back with you guys. It's been a couple weeks, but here we are. So today, I think most people think they know what the Federal Reserve is. I've heard things of they think it's a money printer, a government bank, a policy committee that sets the economy. And none of those are quite right. In this episode, we're going to answer a simple question. What is the Federal Reserve? We want to keep politics out of this, and we want to try our best to keep things structural in nature. Because I think if you could understand what the Federal Reserve is, what they do, I think a lot of debates about inflation and debt and crises, I think suddenly stop making sense, and a lot of market behavior starts to make more sense, okay? But first, let's talk about what the Fed is not. We got to clear this up a little bit, okay? The Federal Reserve is not a commercial bank like Wells Fargo or JP Morgan. It does not take deposits from the public. It does not make consumer loans. The Federal Reserve is not a government spending agency either. It does not decide fiscal policy. It does not choose how much Congress spends. And the Federal Reserve is not sitting in a room deciding the price of money in the way I think people might imagine. Those misunderstandings, I think, come from treating the Fed like a centralized controller. It isn't. It isn't a centralized controller. In that way. At its core, the Federal Reserve really is a balance sheet institution. Okay, its job is not to manage the economy directly. Its job is to stabilize the monetary system that allows markets to function smoothly. The Federal Reserve sits at the top of all the monies in the world, if you will, top of the dollar system. It supplies the final settlement asset used by banks to pay each other. It manages the infrastructure that allows payments, clearing, and settlement to occur safely. And during stress, it acts as a backstop to prevent the system from collapsing inward. And that is the key point. The Fed is not primarily an economic manager. It is a system manager. And I think that is a really important thing to try to keep in mind as you're trying to figure out what the Federal Reserve is. But the most important thing the Federal Reserve creates is bank reserves. Reserves are not cash in your pocket. They are digital settlement balances held between banks and the central bank. Okay, banks use reserves to settle payments with each other, to meet regulatory requirements, and to maintain trust in the system. When the Fed adds liquidity, it is usually adding reserves, not money for households. And that distinction matters because reserves stay inside the banking system. They don't automatically become loans. They don't automatically cause inflation. And they don't directly finance government spending either. But that's a different topic. But why does the Fed exist at all? The Federal Reserve exists because modern financial systems are extremely fragile. Banks operate on leverage. Markets depend on confidence in settlement. Liquidity also can vanish faster than assets can be sold. Without a backstop, small problems really turn into cascading failures. The Fed's role is to prevent temporary liquidity problems from becoming permanent system breakdowns. And that's why the Fed, you see them intervene most aggressively during crisis, not because it's here to cherry pick winners, but because the alternative would in cases be systemic collapse, I guess would be one way to say it. But some common misconceptions, some big ones anyways, is the Fed does not print money in the everyday sense. it swaps assets for reserves inside that financial system. The Fed does not control inflation directly either. It influences financial conditions. Okay. Markets kind of are supposed to do the rest in those cases. The Fed does not fund government spending either. Okay. The Treasury and the Fed are separate balance sheets. And the Fed is not omnipotent, if you will. It cannot force banks to lend, cannot force markets to take risk, and it cannot prevent every crisis. What it can do is keep the system standing long enough for adjustments to occur. And that's, I think, a more healthy way to look at it. And this matters because understanding the Federal Reserve is really a way to misread markets, I think. You misinterpret rate cuts, you misunderstand QE and QT, and you kind of misdiagnose crises. And I think once you see the Fed as a structural stabilizer rather than a controller, I think its actions start to become more favorable and far more predictable and far less mysterious, for sure. So I think it's an important thing to understand that the Fed, although, there's a lot of conspiratorial stuff around the Fed and things of these natures, but take away all these issues about the Fed being this hidden monster, or that there's just, it's riddled with bad people. We need to kind of look at what it does positively, and we can't really look at something positive unless we at least understand what it does first. So I want to thank you for listening to Prime Ledger number 3. Talked about the Federal Reserve, who they are, what they do, and just tried to clear up some misconceptions. So once again, I'm Justin, and thank you for being here.